Welcome to our session on understanding key tax credits related to dependents. Today we'll explore how to identify, apply, and report various dependent-related credits. This education will enhance your expertise as tax preparers by ensuring you provide accurate tax advice to your clients. Let's begin by distinguishing between non-refundable and refundable credits, which is foundational in tax preparation. First things first, let's clarify the difference between non-refundable and refundable tax credits. Non-refundable credits allow you to reduce your tax liability to zero, but not below zero. In other words, they can only reduce the amount of tax you owe to the government. They do not result in a refund. Examples include the child tax credit, otherwise known as CTC, and the credit for other dependents, otherwise known as ODC. On the other hand, refundable credits can reduce your tax liability below zero, resulting in a refund. This means if the credit exceeds the amount of taxes you owe, you will receive the excess amount as a refund. A key example is the Additional Child Tax Credit, ACTC, which we will discuss in more detail shortly. Now let's delve into the specific credits based upon dependents. Each of these credits serves a different purpose. The Child Tax Credit is designed to provide relief to taxpayers supporting children under 17. It's a non-refundable credit of up to $2,000 per qualifying child. However, part of it can become refundable through the Additional Child Tax Credit if the Child Tax Credit exceeds the taxes owed. The credit for other dependents is a non-refundable credit that provides up to $500 for dependents who do not qualify for the child tax credit, such as dependent children 17 or older or elderly parents. The credit for child and dependent care expenses helps offset costs to your child care while you work or look for work, and the adoption credit provides financial relief for the costs associated with adopting a child. To qualify for the CTC or ACTC, a child must pass several tests. The age test requires the child to be under 17 at the end of the tax year. The relationship test covers children who are your son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or descendant of any of these. The support test ensures the child must not have provided more than half of their own support during the year. The dependent test necessitates that the child must be claimed as a dependent on your tax return. The citizenship test demands that the child to be a U.S. citizen, U.S. national, or a U.S. resident alien. Finally, the residence test requires that the child have lived with you for more than half of the year. The ODC is for qualifying relatives or dependents who don't qualify for the CTC. To be eligible, the person must be claimed as your dependent. They could be a parent, grandparent, niece, nephew, or others who live with you all year as a member of your household. The dependent's gross income cannot exceed a certain threshold, which changes periodically due to inflation. Lastly, you must provide more than half of the dependent's total support during the calendar year. For the Child and Dependent Care Credit, the care must be for one or more qualifying persons, defined as children under 13 or disabled dependents regardless of age. You and your spouse, if filing jointly, must have earned income during the year. The expenses must be incurred so you and your spouse, if filing jointly, can work or look for work. Calculating and reporting these credits require careful attention, so let's review the specific forms that may be necessary. You will use Form 1040 to claim the CTC, ACTC, and ODC. Form 2441 is used to calculate and claim the Child and Dependent Care Credit. The IRS provides instructions for both forms, guiding you through the calculation based upon the taxpayer's specific circumstances. As tax preparers, due diligence is a crucial part of your job. This means verifying the information provided by clients, ensuring all tests are met for dependents, and maintaining accurate and complete records. This not only helps in preparing accurate returns, but also protects you, your clients, and our business. Incorrect claims can result in penalties, client dissatisfaction, and potential legal issues. Always verify the data provided by clients and ask for documentation when necessary. If something your client says is inconsistent or unreasonable, you are required to ask follow-up questions and document their answers. Today, we've covered essential aspects of tax credits for dependents that are critical for your role as tax preparers. By applying this knowledge, you can assist clients effectively, ensuring they receive the maximum benefits they are entitled to while adhering to tax laws. Thank you for your attention in these valuable tax credits. I wish you much success in your tax preparation journey.